Hey guys, Boris Last from PK Forex. Welcome to our daily Forex technicals for 5/7/13. Aussie dollar breaks support. Key story in the Asian market today. Trading foreign exchange on margin carries high level risk may not be suitable for investors. So we ask you to read this disclaimer very carefully, understand all the risks associated with trading foreign exchange on margin. Well, the story in Australia, of course, in Asia was the RBA rate cut. Not unexpected. Market was actually leading that way, and of course, the trade really took the Aussie down through the key support. Let me just go to the 4-hour chart. You can see this much sharper there. So this was the support. The 101, 102.25 was tested a few days ago, right over here, and provided pretty strong support really for the last several days. And of course, here we go. And of course, it got taken out completely in today's trade. It got tested a little bit actually just before yesterday, and then it got taken out completely by the RBA rate decision. What's interesting, however, is that you're starting to see a very big battle. This is a 4-hour chart, but you're starting to see a very big battle around the 102 level, and I think that's really going to be a big tell. Let me go to to a much more granular chart. And you see that the 102 level is kind of 180, 102 is kind of really holding as a consolidation level. So generally, this is where you get either continuation or a little bit of a reversal. The reversal would take us back up probably to a retest of this 102.25, which is where we broke the support. The continuation, obviously, a break of 101.75 takes us possibly to 101.50 as the day progresses. We'll have to see how the trade shapes up, but on a longer term basis, Aussie definitely broke support here, and very likely, unless we have some surprisingly positive risk flows and a tremendous amount of buying, the um, the message from the RBA was that the Aussie is too high, and that really does put downward pressure on the pair, and probably takes us to 101.50, possibly even 101 over the next day or two as the news begins to sink in. Near term, as I said, intraday, the retrace takes us back to the former support, which is now going to become resistance 102.25, and a continuation is a break 101.75, takes us possibly to a 101.50 as the day continues. That's the big story, of course. Elsewhere, we pretty much have the same thing as before. Euro dollar just marking time at around right above the 103.50 level. Not too much data out of the eurozone. This, if we look over here on the 4-hour chart, you can see this a lot better. Euro now is on a broader basis. It's still sort of 29.50, 30, 32.50 wide range, but within that range, we now have this sort of a minor range of 30.50, 31.50, and it seems to be like it's sort of interesting that the volatility in the euro continues to compress, and of course the resolution of that volatility tends to give us directionality. So whichever way we break out, it's kind of likely which way we're going to go in the near term. So that's the euro. Not really much going on there. On cable, we still hold above the 55 level, but we're continuing to really drift. And this cable just tends to do this quite a lot, where it will reach a level and then it corrects, significantly. The correction here takes us to 54.50 as a natural support level in cable after it's run out of juice going forward. And lastly, dollar yen actually playing a lot of games in the Asian session. Really gave back the 99 handle, then came back up. And we're still trading this 99, 99.50 corridor, which is a critical corridor. The negative case for dollar yen, if dollar yen breaks down, if we break down all the way to 98.50, above 98.50, we still have a modestly positive tone, but a truly positive tone only comes to play when we go into 99.50, 100 corridor. Then we rebuild for a possible run back up to 100. So that's sort of how the day shapes up. I'm wishing you guys the best of luck and the best of trading. This is Boris Schlossberg. As always, trading foreign exchange carries high level risk, may not be suitable for anyone who trades on margin. And we ask you to read this disclaimer very careful to understand all the risks involved in trading foreign exchange. Over and out.